Hello from the children of planet Earth. Hello from the children of planet Earth.
What's up, everybody? Good morning. It's now Tuesday. Getting ready to show off the new live futures launch for everybody. Exciting morning. Market opening below DD bands. A little bit of volatility crept in overnight. Selling in European session, but we'll see if this recovers. This is an interesting month. It's an interesting look on the market. I don't necessarily think I like it as much as I did yesterday. We'll see how it turns out today, and we'll start everything up. Get ready to get going, you guys. Market opens in 3 minutes. Take a look at the morning news real quick. 3 minutes till we open. We got earnings today. Everything's run through. Big today. We'll talk about the TOT report in a little bit. All right, got today. Red Book. Wait, today's not Wednesday, is it? Today's Tuesday. Yeah, that's right. Oh, that's the EIA short-term energy outlook. Interesting at 11. Okay. I was like, EIA reports are Wednesday. Alrighty. What's up? Good morning. Good morning. Everyone smash the like button real quick. Yo, what's up, Austin? Good morning, brother. All right. Lifetime members, you will notice that your connections tab should have your future stuff ready. So you guys are beta testing it. Y'all get a week to play where we do the public launch.
Hello from the children of planet
Opening outside DD bands, so it's already a trade small day. We need that VIX to get below this August triple B, but it is still creeping higher. The market is trying to find some volatility. So we'll see if this is a bottom for the S&P or not. If not, then we'll know about today or tomorrow. Ready to get going right out the door. Yep, so basically you'll need to go and create connection and create your account and everything. If you click that link, should have all the information you need. MK is like, buy here. Hey, man. I like how you think. All right, let's get ready to go. Liquidity maps open. The monthly maps looked stable. They did. They looked stable for this week, and that was after yesterday's open. So we'll see if today's any different. We'll be testing out some live trades today, right out the door. Let's take a look. Resilience is positive. That's good. We're opening near the bottom of the box. Positive resilience. Hopefully we stay positive. I might take a quickie long out the door just to trade the half gap. But we are outside DD bands and NASDAQ, so be very careful. Anything I'm doing is like 2 or 3 contracts instead of like 10. Resilience is looking good. DD's dropping. Resilience is staying, which is good. Let me test the autofill settings. Okay, instant order placement. Okay, let's see how this works. Good. Just double checking. Everything's looking okay. I just grabbed 3 micros out the door. Nothing crazy. I just need to test some things. Quantity greater than 1. I'm not doing this because I think I want to. I need to actually just test an order.
I picked this.
All right. Let's say 4510 and it marks at 4510. Oh, that's kind of cool. That's probably what's doing that. No. All right. See liquidity maps coming through. Bear short. Monthly hedge pressure still coming through. We are below hedge pressure, so not the best sign in the world. That 448 might be a resistance to turn us around, and that resilience is now negative again. Okay. Not a good sign to be long. Just want to do something. So yeah, no trade yet for realsies. Like no trade. This is a test trade to test something we're still working out. We're testing this thing right here. Yeah, so no entries yet. Nothing for real. This is a wait day for real. This is one of the things we're looking at. Why it's doing this? It's freezing the DOM on the fill price. What's up, baby? See if resilience stays positive or not. Let me test one more to see if it's doing it here too. One more. Oh, that is showing. Okay. All right, so let's look at liquidity maps at the door. We'll talk about live futures trading just a little bit. Nothing really today. Bear short ups across the board. These are resistance trades off of hedge pressure. Could be a short setup from blue to yellow if we get that resistance there. All right, so this is just so that my dev can watch me trade. I don't want to be long. I want him to hurry up and finish so I can close this. I'm going to be long on hedge pressure rates today. So today, there could just be a resistance off of hedge pressure pulling back. Resiliences are negative, not looking great. Russell resilience is looking good. There's some breadth there, which I do like. But essentially, resistances off of hedge pressure. That's not really the best sign in the world today. Today, the trade is on Russell. Russell with a bull long up with positive resilience. This will prove the market's not crashing if we get some good breadth here and people are rotating into Russell. So I'm going to keep an eye out on the Russell trade today. For some reason, let's just see how this plays out. I'm actually not hating this. Everybody smash that like button real quick if you don't mind. I'm liking today how we have IWM on a bull long up. So we'll see if there's a little bit of rotation there. That'd be an interesting setup. All right, guys. You may notice on your connections tab, you're going to see the broker connection. For those of you in the lifetime group, you'll have the ability for the next week to kind of get a head start, get your account set up, get futures data set up. The next thing we're doing tonight, we're going to be automating DD bands and everything for the charts. So that'll be coming out very shortly. Everyone else, you need to be in Pro Plus by this week for you to get the launch head start as well. If you're not in Pro Plus, you'll be at the end of the line, so it'll roll out to you randomly. Pro Plus is the next group to get this launched in batches. So if you sign up before the end of this week, you will be make sure you upgrade to Pro Plus on the website. Actually, don't want to be in this trade. He's now seeing it. Okay, good. All right, let me just find that. That was a test trade. Didn't want to be in a trade, so not here. We're looking at why the fill price is printed on the DOM. I think we just think it's a feature of the DOM. So in reality, resilience is negative, so we're going to be outside the boxes. Resistance. Let's draw all the parts. Okay. All the pieces here. Okay. First and foremost, resilience negative. Type 1 shows boxes resistance. Type 2 says half gap is resistance, so there's a hedge break. Bear short up. Obviously, any support, any longs off of monthly hedge to hedge pressure, any resistance off of hedge pressure down to yellow, which is way down here. DD still being bullish. Again, stocks have just been pressed into bull territory. If there's any upside, like I said, it's a limited upside today, not a big screaming rally. Open bear zone, likely close in bear zones, what we're seeing. So a bull tap is the highest I expect. So any upside today, like if resilience flips positive, like I said, we can be up in here, back down to there. Only on positive res. So when you add it all up, market's going to be here today. I don't like it. Not a big fan of it, but it's not. Let's just see what the VIX is doing though, because today with Russell being a bull long up, this is a little bit different, right? So we got a little bit of rotation, which it's interesting to see. The Russell resilience is positive. So the S&P and Nasdaq pulling back. Okay. Okay, I love what I see. Let's check the scanner and see what we have on market today. Let's remove illiquidity pockets. Let's find some MHP equals HP trades. Actually, I'm gonna look at some of these, and we'll do bull sides. See if there's any bull sides like this. Roku, Snap, Wish. Oh, I remember that stock. Some of them look like here. Oh. Okay. So one thing I need, one thing that we're gonna need to make is oops, is a watch list. So I don't have to always keep typing in futures. Oops. Contract code. So one of the things I'm doing is I'm gonna put a watch list over here, like a small one, just have the things that we're saving. What's up, everybody? Good morning. All right, we're just waiting. We're watching markets bounce around under D band. It's not really the greatest long signal in the world. Volatility is still creeping higher. Let's investigate this volatility pattern. This is very, very interesting. Ever since we had the credit rating downgrade, the market has been a little tumultuous globally. It's not just us. Everyone else around the world is kind of freaking out. Using this as a place to start taking profit. Now the question is, we've had periods where the market has sustained volatility for multiple days without decaying. It's still bounced around before volatility picked up. It's not a good sign. What it means is whatever trades or whatever upside we have is not. It's being hindered by a lot of profit taking. So this could be a sign that the bull move is over. But it's not going to be over like today and crash out. Typically, those extended volatility, they have to work their way higher. Markets just don't collapse. You still have shorts covering and other people here taking profits, longs jumping in late. It's a little mixed bag, but normally what I'm hoping to see is something like this. Like the market is still going to bleed out that volatility and then prove us wrong if it's going to be one of those chaotic environments like it was last year. So I've been staring at the September volatility patterns, right? And I hate using patterns to make decisions today, but you can see that volatility hovered for a little bit while the market didn't collapse out, and then it finally did and finally bottomed. So hovering in the 20s was back then. VIX is still below 20 now, which is not, or VIX futures still below 20, not a terrible sign. But those extended raises in volatility, you want to see those 1 or 2 up days where that volatility collapses, and then measure the market. So obviously VIX doesn't say if it was a market collapse, the VIX would just keep moving without stopping. The fact that it's hovering and oscillating like this, it either crashes today or it's going to be another pattern like this. So in reality, if today isn't a market crash, VIX is probably going to do something like this. And then if it's going to crash, it'll keep going. This is kind of what I'm looking for to sustain. So as monthly map shows stability, I'm hoping we get 3 or 4 up days. My target of this rally kind of sustaining until September, October. I'm probably changing my viewpoint now that it's probably gonna last until August expiration. So we'll see. We get 3, 4, 5, 6 good up days. Hopefully before the end of the month. That'd be great. But again, the market could collapse on itself today. We gotta watch it very carefully. So hopefully that VIX stays in control over the next 3 or 4 days, but we'll see. All right. Let's keep a look. Resiliences are still negative. That Russell's BLU right at 191. So that's an interesting sign. I do not hate that. Let's take a look at the S&P monthly map. Still showing some bullish stability in here. It's like that dip's going to get caught up maybe tomorrow or the next day. I don't hate it. So let's just see where it's stabilized. Just no target to long off it right now. Look at this is where that weakness is coming through. You got your big tech stocks are the ones that are pulling the entire market back. That breadth is showing some cycling into Russell. S&P is pulling back a little bit as well, being hindered by that. Your big tech stocks are becoming volatile right now, and that's where that is showing it volatility. So when the bull side is fleeing and the bear side's fleeing, you're losing that big tech run up that we've had. Let me see if I can lock the DOM this out. There. Okay. Dude, Edge Clear is great. That's why I like them. So we partnered up with Edge Clear. They're going to be our broker for futures. Our main broker for futures. You can open accounts with Philip, Dorman, Iron Bean. There's a bunch of them they work with. Okay, so far nothing right now is giving me any sign to do much. just yet. But that volatility, that turnaround, this is a change from yesterday. That is what's introducing that volatility today. And if that selling of tech turns into buying of smaller caps, then we could get a little rescue. I'm still nervous about this market. It's not as stable as it was before. This is that instability. We gotta make sure we're honest with ourselves. We're not carrying like confirmation bias, because I want the market to stay healthy. Got to read what is. Not the best sign in the world. The fanning like that, as we've talked about before, this is going to measure illiquidity, right? This is bull side leaving, bear side leaving. So this is illiquid. Okay, illiquid equals volatility, right? So we know when they fan out like this, when the monthly maps fan out like this, then bulls are exiting, bears are exiting at the same time, which means volatility up, right? Illiquidity is volatility up. You guys remember that? This is a lesson today. Volatility. See, volatility is up. Right? Let me post this in the chat for everybody. And it's neat how that spread of positions in monthly map shows that volatility is up. And guess what we have? Volatility is up. Monthly maps are that good at showing that, right? So that's something to not sleep on. So this is in big tech, so I bet you today we're gonna get some really nasty runs, and we're gonna get nasty runs. Hope I don't get the nasty runs today. But like, right, we need Apple. Clearly, you know, post Apple earnings not really the best move here. We need Apple to save us, right? Apple's still surprisingly holding a dip here, so I hope that at least over the next week or two, up until the expiration of August, Apple does save the market. Now, again, the way that things are lining up shows that this is just tech. Okay, so looking at a monthly map on Apple, let's take a look at a couple of things. See, this selling has a lot to do with just the big tech topping out, right? So Apple's still okay for now. Apple could find support here, but then it's out August 18th, right? It's bad again. So hopefully Apple hooks up over the next couple of days. This is what I'm hoping and anticipating that we get. At least a retracement trade. And some more downside. Tech. All right, so trading outside of DD bands. Not really looking super hot today. I'm not loving what I'm seeing. So just kind of waiting on this, right? It's like you wake up, you know the market looks a certain way. You don't have to go out there and force anything. Nice and stable. Market's just clean. Clean. Market's not clean, but it's easy to see that it's not clean. And there's really no reason for me to waste my time. You know, don't go chasing waterfalls, as TLC said. Don't need it. Just let it do its thing. Volatility typically is short-lived, so we'll see how this works. Now, what the Apple implies is that there is, between now and August 18th, that there is potential for Apple to be bullish, not this week, but maybe next. Maybe a dip into monthly. So on the last week in the monthly expiration, I think that the market will try to retrace. But it's not looking good. It's looking volatile for tech. Let's run like Microsoft and some others. See how they're panning out. Microsoft's still steady. Let's look at Tesla. Tesla still, again, steady for a couple weeks. As volatility bleeds off, I think the market will stabilize. Tesla, what are some other tech I want to look at? Nvidia, oh yeah. Nvidia wasn't looking super hot. Yeah, Nvidia's stable. Definitely stable, so hopefully Nvidia can save us. I saw Martin Shkreli made a post on Twitter yesterday. It was funny. He goes, he looked at the 4090 graphics cards on Amazon. There was like 93 of them. He's like, if I only spend $200,000, I can buy all the inventory of the 4,000 Nvidia chips on Amazon. And everybody was like, oh, you're back. That was a really funny. Hey man, supply and demand. It's the way that it goes. I remember when I bought my 3080s during COVID off of eBay. COVID, at the time when crypto was hot and everybody was trading crypto, 3080 Ti's, because I only buy the Ti versions. Like I don't buy the in-betweens. I actually might skip this gen and not buy the 4080s and just go to the 5000s. But they're coming out in 2025, I think, because I don't want to take apart my water cooling system for a minor upgrade. Anyways, when I had 3080 Ti's, you couldn't find them because everybody was buying these graphics cards for like, I don't know, crypto trade. I don't know how crypto mining works. I really don't care to know how it works. I think the idea of crypto mining is completely weird and dumb to me, but whatever. People bought computers just to sit there and crunch numbers, and it made them some crypto. So there was like supply and demand, and then there was the chip shortage and all that stuff. So you had to get them like off of eBay. And I swear, like my graphics cards, I paid the 3080s. The joke is I literally paid $30.80 for them. $3,000 a pop, and I have 2 of them. Freaking COVID. But I decided to build a machine in 2019. Believe it or not, 2019, I bought half the components to build a machine at the end of the year, and then COVID happened, and then I was like ordering components. I'm like, whatever, I'll just build my computer during this slowdown when everybody's trapped indoors. Then the shortages happened, and then I had to collect parts over the years. 3080, like $3,000 a pop. Usually they're about $1,500, give or take. Those inflated COVID prices, dang it. Okay, let's take a look at. See, like Nvidia's looking good though. Like I said, bull side hanging in there, bear side still exiting, so we still could get some mercy candles out of this market. So what I drew for Apple implies what I think we're going to see. The market's going to retrace and revert to mean before August expiration, but then it's starting to look really bad. Like people are going to start. I'm going to move my understanding of this market pivot up to September. Unless the volatility collapses out in the monthly expiration, it's not looking so hot anymore. So you can see right here, especially with Apple. Look at this. The bull side is just fleeing in Apple right now. Now, I'll go ahead and Apple's just one stock. Nvidia looks a little bit different, right? Let's see what AMD's doing. Apple just being one company, but we always try to use Apple as a benchmark for the whole stock market because, well, that's what you got to do as a modern trader. And AMD looking the same as Nvidia. I said Qs are looking, see how Qs are matching what Apple's doing? Qs match Apple. Not the best sign in the world. Qs. Now again, just because people are just mirroring those trades, there is some, like I said, there's some good breadth today. People are rotating in the Russell. So it's like the stableness of just, tech finding some loss. People are rotating into other things. We'll check utilities in just a little bit because I want to see that same Nasdaq is going to be volatile again. And it's just how everything is playing out. So Nasdaq again could be another wave out. Oops. Let me draw this right. Bull side leaving, bear side leaving, market's volatile. So I always try to assume volatility goes down, up. Yeah, so somewhere between now and August 18th. So I'm just drawing a V for volatility. Somebody should make that movie with Natalie Portman and Hugo Weaving. V for volatility. Yeah, movie Jack. The Adele xylophone version is awesome, right? I know. I dig this. Lo-Fi Geek is the channel. Actually, that's not how I'm... This is really hard to read because the bull side is like way out of here. So, oh, I'm sorry. These are... That's why it looked weird. The time scale was off. Okay, there's the bull side. Let me take a better picture. Oh, you. Okay, so about August 18th is here, where you see some bull side support. So essentially, you've got volatility slamming down, bull side, bear side like this, right? So again, bull side weakening and then strengthening. So it's like dip before rip. So essentially what I'm expecting the market to see is a little bit more downside. Let me just draw the market itself. You guys understand how to read this. Volatility, maybe a little bit more downside. And then there's that August inflection again. And then it's hard to see what happens from here. So somehow between now and August 18th, oops, there's likely a revert to mean. So volatility. I really do think this is likely we can see if the volatility doesn't dry out. So that's just the cues. Let's take a look at the Russell. Interesting to see how the market is behaving, because we know that this is a tech rally, and obviously just one company like Apple just pulling back. You can see that people are still interested in staying and getting into other things. I think Russell's going to be, if the market sustains any kind of power here, we're gonna need to see people move in the Russell. This is one of the things that does kind of make me worry, is that normally people risk on into the riskier stuff and then the safer stuff. The riskier stuff last, safer stuff first. So people rotated into the rally on tech boom. We got into the S&P, started moving higher. Banking was moving higher. Things are looking great there. And then you'd want to see when that stabilizes and there's some profit taking, you want to see people take that profit and plug it into the Russell. If that's the case, the market has that breadth of what you're expecting, then that's healthy market, healthy rotating, right? You don't want to see just a couple of sectors or stocks moving the market higher. So the idea that there's not a huge risk on trade on the Russell just shows that people are going into that hype rally. So in this first wave of profit taking, we're seeing after earnings in tech, as people are deciding what they're going to do with their profits, are they rotating into the Russell? So if the Russell is not gaining any strength off of it, then okay. But as we see, the Russell is the star today. Russell actually is looking good. So let's see if that Russell, that's why I have it on my chart. Let's see if that Russell is where people are rotating in. If the Russell sustains and looks great, it's going to give bulls confidence in everything. So if all things are selling off, hello market crash, right? Now again, the VIX only represents the SPX. So the VIX isn't going to pick up rotating outside of the SPX, right? We'll have to, so let's see what other sectors are doing. Let's see how we're doing on some of the other trades here. Let's run through our sector analysis. Oops. So yeah, so you know it's cool with Rocket Screw. I can wake up, I can see how things look, and just decide I don't want to touch, I don't want to wait yet. Today, I don't want to touch it, just kind of want to wait on this, let it do its thing. Utilities being one of the least moving sectors today. We have the oil outlook coming out in about an hour or so. So I want to see how the EIA outlook is gonna turn out. It is a big mover. The short-term energy outlook on the EIA is always something to take note of. It's going to provide a little bit of that near-term monthly perspective on the energy markets in general. As you see, to support any type of economic growth, you're going to want to see certain things hold the fort, right? You're going to want to see utilities move. So energy demand and things going up. You're going to want to see a lot of that. Wait, where'd my... So today, the big losers, tech, materials. Materials are looking a little... We want to see utilities and materials kind of take some run. Energy kind of sucking ass also. XLB. Universion on materials today. The map. Let's get a daily turn. Yeah, unless if SPY's gonna rush to fill a gap to the downside, if it doesn't try to do it today, then the market's gonna stabilize. This growing volatility is concerning me for sure. I don't like it, but it needs to move quick. Sorry, you guys can't hear what I'm saying. All right. Sorry, I muted my mic here. Let me start over. Originally, when last October we called a bottom, right? Using monthly maps, easy to see that. That happened, so the rally would last through the new year and into the summer when things would finally start getting to lower lows again. Towards spring, we revised that call to say lower lows not happening and that the rally is going to keep going. And then in the summer, we said that the rally was going to go until about October, as monthly maps showed that. Now, as the weeks have gone by over the last couple of weeks, the monthly maps have deteriorated to show that there's volatility in the short term, and that October moved back to about September for the pivot. So essentially, monthly maps is showing us about how far out the market's expected to show this volatility. And right now, it's showing that volatility immediately. Up until August expiration. So the best I'm hoping for right now is one of two things. Either A, this selling, creating the volatility in the market itself is going to turn into rotation into things that haven't moved yet, like Russell. If this is really, truly a bull market, you're going to see the market breadth improve. You're going to see people, the advanced decline is not just going to be based on the couple of carry stocks like Apple. Are people running out of profits there and then putting them into other things that haven't moved? Like, why has the Russell not rallied like everything else? Is it because people were just hyping on a tech boom for a year and getting out? Or is it because people were riding the first wave and now they're going to cautiously move into something else? This move from the S&P into Russell will be all the proof that we need that the market is stable. If this doesn't happen, we know that the market is not stable. So as the data changes, so should one's view, right? So our view, as you see, as of the funny thing is I made a tweet and it kind of went mini viral for the scale of fishbowl fame that I have, which is small. Fishbowl, like tiny, like a little gold, like a little beta fish at the store. Where I said it's better to be a bear 1 week late than 6 months early. People love that saying, apparently. Because it's so true. It's funny that there's no, and it's like if you're right on the state of the economy, you're usually wrong in the markets, because the markets price in the future, not the now. The markets now never really match to what the economy's doing now. If you're in a short trade while the market's going up and you're screaming the market's going to come down because fundamentals are bad, you probably lost a lot of money before it did do that. Even Michael Berry did that on his big fat trade. Lost hundreds of millions of dollars before he made billions, right? So you have to understand that the market's going to price in the future, anticipation of what's going on in that future now. If the economic data is bad, then clearly the market will price that in way before time. The economic data is looking better right now. That's why we've been rallying. That's my theory. So why the rally is actually happening, not just a tech boom. All the underlying mechanics of the economy are improving. Jobs data looks better. Inflation data looks better, slightly better. Now, we don't have the liquidity of quantitative easing pressing the market higher and giving the confidence, but people clearly were confident in the tech move. And so as we've realized the market's moved up, we've realized that economic data was improving. So we've effectively priced that in since last year. People are betting on economy growing. It has been slightly. Now, the question is, are people now going to start betting the economy is going to turn around? Inflation going to come back? Is QT going to come back and haunt us? Which, again, we don't know how QT is going to affect the market. That's the big if here. We haven't really traded in a period of QT before, so we don't know how that's going to affect people's appetite for rotating in and out of stocks and hanging in there. If the Fed is not in there keeping the market up, they keep saying they don't want the market to collapse and create a recession. But if you trust their narrative or not, the question is, does Wall Street? Let's take some profit on tech. Let's rotate in the small caps. Let's stay in the stock market, or let's not stay in the stock market. That's the question we need to understand. Let's read the COT report and see what we have today from last week's data. Are we still liquid or not? And so, yeah, back to what my original saying was, the people that were bearish since April, May, June, July, August, they get louder when they get their first turnaround. And then they're like, see, I told you so. But the funny thing is the moment they're saying, I told you so, is like the moment I'm agreeing with them. The trick of being a trader is to time the market correctly. There's no see I told you so. I'm like, no, I'm at the bear party too. I can see the writing on the wall. It's got to rescue itself. Commitment of traders, you have green line selling, blue line selling. This is illiquid to the downside. Everybody's selling right now. It's going to create some selling pressure. This could be topping things out. We got to be very careful. My COT froze up. There we go. So over the last couple of weeks, we've gone not a lot of selling, but some selling, right? 819 till about 802. So just a little bit of selling, shorting and selling at the same time. Both of these pointing down is leading to that volatility that we're seeing, right? So general profit taking here. Let's see what the NASDAQ looks like. The NASDAQ, there's that illiquid selling as well in the NASDAQ. Let's double check Russell. It's got to be a Russell one, right? Let me go back to committed traders. Oh, QR. So this is a good sign, at least so far, but in the short term, again, you can see that the asset managers have been finally netting along on Russell, at least the last bit of this. So that's decent. That's not a terrible sign. But you can see that in the last, again, 2 weeks, there's 1, 2 ticking down. So everything is getting that selling pressure in the market. So when these are both pointing down, that's not a good sign. So the cool thing about, reading the market, especially with Rocket Scooter, when we have all the ability to do so, it's not, you're not missing out. Like obviously we know that the market's going to create QT and there's a credit event looming in the next 2 or 3 years sometime, but timing it is not like, okay, here the market's going to crash and then miss a year worth of rallying. It's like the very first week market turns around. That's when you finally see me saying, okay, you know what, let's look at this. I don't know if I like this, and this is different. So your goal is to not find every red candle and say, oh, that's it, market's turning around. We saw these red candles and we're like, dip to buy, and market saved itself. Right now, I'm not liking what I see. I got about a day or two to decide if I think that the market's going to hit some really nasty selling or not. So I'm joining. My tweet last week was, this could be it. We'll have to see. It's not, it's falling. It's knowing that that's it. Because back here is when I said the market's bottoming. Last year or 2022, right here, I also said this is it. This is the time volatility is creeping in and it's time to go to the sidelines. This is the pullback, the big one. And so being at the corner of the market when things are turning around is better than being wrong for 5 or 6 months and then not knowing how to be wrong. The art form of becoming a successful master trader is knowing when you're wrong. Right now, if I'm admitting that I could be wrong on both sides and I was a long trade, I got to decide I might want to get out of my long trades. I got about a day or two to make that decision. Before I would lose everything riding a wave down, I would just know it's time to take profit and walk to the sidelines. All right, so there is no reward for being in the I told you so camp. Because I told you so means you were wrong, or you were wrong when everyone else was right, and then you're finally right. It means you were taking losses and then you're finally no longer losing. I told you so means you're no longer losing because you weren't in the other party that was winning. So you either weren't betting, which is like most bears, or you took a huge loss before it finally pivoted in your favor, right? So a lot of people saying, I told you so, immediately make fun of them. You say, well, you told me what? That you were losing the whole time I was winning. So now I'm no longer winning. What did you win? Oh, the I told you so tweet? Oh, well, I'm in the same boat as you. The minute your side played out, I'm actually believing in it now. But here's just the difference. I timed it better than you did. I'm not 3 months early. I'm 1 month late. And so, or 1 week late. So now I'm on the same fence. I'm like, you know what? I'm not seeing the breadth that I want to see. I'm not seeing the rotation into small caps. We're seeing volatility creep up. Monthly maps are showing that tech is leading the downside. And you're not seeing me walk in here and longing the farm trying to buy dips. We have everything we need to see this. That's why Rocket Scooter is going viral. So everybody's checking us out. They're seeing that positional data is the future of reading the market. Ever since December 2022, ever since December 2021, you guys have seen me, even before monthly maps was released, I would draw them manually. I've been using them to time the market, and I've made those pivots, the bottoms, the tops, literally a day or two after they bottomed out. If you guys remember my tweet, I always like to show this one off. Again, I don't make big tweet calls all the time. But you'll see this one right here. Oh, let me show you this. This is where the monthly map was looking strong. This is what the SPY looked like where we believed the rally was going to sustain. Do you see all of this right here? Let's compare that to what we actually have now. As you see, the deterioration of the monthly map. Look at the difference, right? You see how I'm not waking up every morning saying, oh, this is going to be crazy good bullish. You can see that strong bull side that we were betting on is late in July. The market has changed its tone. We all see that. That nice strong bull signal is starting to rapidly deteriorate. We've got like a week or two left of this rally unless bulls step back in. So it's like I'm not sitting here April, May, June saying, oh, this is it, market's going to crash. Now I'm saying I don't see much past August expiration that's giving me hope. See how I'm better than everyone else in the world trying to time this by just staring at positional data. Each one of these dips, I'm not like, oh, that's it, that's the end, that's the end. Each one of those dips, you know, Ash and I were like, oh, things are still looking great, looking great, looking great. And now this is the dip that we're like, okay, not looking so hot. I'm not like going back in time and saying, oh, it's because we're double topping. Oh, it's because we're hitting that resistance. There are people that are going to be like, look, it hit my resistance. I was totally right. That's not why markets are pivoting. You can just see it in the monthly maps. We've got SPY's looking good for like one more week. So this dip hopefully gets bought out starting tomorrow, and then we're good. For at least a week to retrace, and then the market probably deteriorates from there. But you can see that strong bull side no longer there. Monthly maps are fucking godsend. To me, this is allowing me to say, yeah, this might be it. Crazy, right? You guys like monthly maps. This is my favorite features of Rocket Scooter. Love it. So we got about 1 or 2 days to decide what people believe in this market. Those bulls have vacated those positions. Commitment traders showing a little bit of selling. Is this the start of the turnaround? If we don't see that selling translate into rotating somewhere else, then that really is going to mean that people are liquidating out of stocks and that this is probably the end. Let me see if I can find my Twitter calls that I made. I thought I bookmarked that tweet. You get it now, right? Green bicep. I'm glad you guys really like some of the features we made. We were very clever in our meetings where we're like, let's come up with something that does this. Let's come up with something that does that. Monthly maps being my brainchild, as I've had discussions with other people about ways to use future data to position into the future. Or a way for us to use the data to see people positioning in the future. This is that tweet. Let me see if I can make that bigger. This is how accurate I was with monthly maps. Can I not make this bigger? Wait. Manage a new tab. There we go. Okay. Let me just show you. Starting here. Now, this is in response to people saying the crash is imminent. Back here. The bear's back here. This is my response to them. People are saying we're going to go into a recession. This market's going to collapse. It's dying. And I said, probably not. It's still going to probably double. There is no pullback or recession. This is from like the 3,000 something levels. It would go to maybe 5,000 or 6,000. Now, again, as conditions change, I change. And as you see, the evidence of that is here. How do I scroll to the right left? So using monthly maps, it was this candle that told me that things are turning around. It wasn't any of these weeks, none of these weeks, none of this, none of this, none of this. It was right here. And I said the future's open, suggesting more downside. I think we broke monthly hedge pressure in the overnight. It's first time in as long as I can remember that I'm seeing a possible short-term correction in the market. There you go. That's it. Short-term correction. We got it. I mean, literally, that's the candle. And at that time, I'm manually making, these calls using the projection in the future we're looking at. And here I call the 2-month rally. Here I call the bottom for the year. Here I said the recession mechanics are over. Here I said that we're likely going... oh, this is off the chart. Right, this is when monthly maps looked good, that we're likely going until October. And then now, as we're approaching October, I pulled that back to September and now pulled that back to August. You can see how my timing is really good. Not to brag, but monthly maps was designed to help a swing trader see how far out to buy options. The design was like, where's my expiration I need to buy? So now I know if I don't get my rally by the 18th of August, we're doomed. Right? I'm not saying it's going to rally till October. That monthly map is no longer looking as beautiful as it did back then. But being able to say this is the correction, this is a 2-month bear market rally, exactly 2 months as a matter of fact. Here is, and I'm using monthly map to even say it's going to last for 2 months. Isn't that cool? People aren't seeing this. Here's to a 2-month. It was literally exactly from monthly OPEX to monthly OPEX. I'm talking about 2-month rally. And then here says this is the bottom till the end of the year. And there's people like back here that are like, I call the melt up. Everything looks great. I mean, if you got 3 or 4 months of confirmation bias, yeah, it's easy to say it's going to rally. How about after the low of the lower low, and then you get one green candle? And I said, yep, that's it. That's the bottom. Okay. So here, these are bull calls. And then now I need to update this as we keep going. But now I said this is where the market's likely. It's not looking so hot. The October pivot that monthly map showed, like they were bullish until October, pivot pulled back to about September. And now it's like got a week or two left and we need some bulls to step in or we're stepping out. And that's the beautiful part about monthly maps. Like I said, enjoy it while you can, because then some hedge fund's going to buy my fucking software and shut it down one day. But I'm not going to let them. I can't let them do that. Maybe I'll make a deal with them. You want to buy me out? Yeah, everyone that has it right now, you have to let them keep it also. I know. I'm going to be Robin Hood here. I'm going to give this to the poor. We're all poor, all of us. Instead of give it to the rich. This is like a city park for everyone to enjoy. Any thoughts on the next 3 to 30 minutes? Oh, yeah. Where are you at 9:30? Don't ask me that at 10:30. You want to know my thoughts on the next 3 to 30 minutes? You got to come in at the start of the day, where my call was very clean and clear. Sit out day. We open outside of DD bands. I mean, this is like textbook rocket scooter stuff. Next 3 to 30 minutes. If you're looking at the next 3 or 30 minutes, you have a problem with overtrading. You gotta stop trying to find opportunities that aren't there. You have to be comfortable sitting out if that's the case. That's what I'm doing, proving that I'm just chilling. Where the offers worth more. In the next 3 to 30 minutes, Ralphie, I'd say you and me should go get a beer, bro. If you were here in Houston, I'd take you out. We would go drink. We'd have well, maybe not this early. Boy, that's pathetic. Am I a drunk? No, we'll go at lunch though. I'll take you. If it's crawfish season, I'd take you to get crawfish. But them things gonna be tiny if we go now. Nothing. Let me walk you guys through it. Out the door, look, out the door. When you're outside of DD bands, already market's irrational. Trade small if anything. My call right out the door was, well, I'm not doing anything today. Nothing at all. Market's irrational. VIX trading up. Nothing. Doing nothing. Trying not to do anything. Trying not to find opportunity. I'm going to be patient on the sideline. I'm going to wait for a dip to buy if I get one in the next day or two, and then I'll take a long from there. So right now I'm deciding, do I want to play this or not play this in the next week or so. As I'm looking right now, I was trying to understand, is the market selling off or becoming bearish, so I can decide, do I want to start joining the bear party? DD's coming off of that really high 90s%, so we still have enough market cap in the bull zone. Let's not be wrong. We still have Nvidia and AMD and a bunch of big hitting stocks still bullish. Do I post a list of my trades? Why would I do that? Why would I waste my time posting trades for other people? If y'all are looking for a stock guru room, there's a billion of them out there. Building a trading platform. You can watch my trades live here, but I'm not going to hand call outs to people as a job. I think that's a dangerous and silly thing to do. But like you'll notice that we're probably one of the biggest trading discords out there, but I don't have a call outs room, and people are always like, where are your call outs? Where are your trades? And I've never had one. I'm like, I'll be honest, I love you guys so much, but I don't love you that much, trust me, to care if y'all make money or not. Let's just be real. I know it sounds mean. This is trading. Daddy's got his own house payment, car payment. It's every man for himself in this game. The trading guru makes money handing your call outs for a fee. I give you the reality of the market. Let's be honest. If it comes between me and you in a trade, and I'm in a trade and you're in a trade, I'm going to take your money and put it in my pocket and pay my bills with it. But that's the reality of Wall Street. You guys have to know that. Nobody out there is looking out for you and your well-being. Now, we love you as clients of Rocket Scooter, though. But that's the trading platform. Therefore, no, Travis, I love you, though. You know I do. But when it comes to trader mentality, it's gentlemen, this is fair combat, every man for himself. I know, Ralph, I'm just killing time because I'm not making any trades today. My thought process out the door is just, what was it? I was quoting in A Beautiful Mind with Russell Crowe. They were playing, they were talking about the Nash equilibrium. He goes, capitalism, every man for himself. And he's like, no, Adam Smith was wrong. You got to do what's best for yourself and for the herd. That's right. But at the end of the day, obviously we all want to train you guys how to trade so y'all can go out there and dunk other people in the market. But that's what people always ask me, like, where are your trading callouts? If you want to watch, if I do make a trade, I'm going to be here and make a trade. I made one today, but not because I wanted to long the market. We're still testing some of the display bugs in the P&L. So I just fired off a quickie just to double check everything was working. My thought process when I enter a trade, I usually will talk about when I enter a trade. Clearly, if I'm sitting out, there's nothing to discuss. But I'm not going to make a post in a Discord about like what I did and why I did it. We do a Zoom call and we do the stream here. If you guys want to ask me questions, feel free to ask. Like if I'm in a trade here, just ask me why and I'll always discuss it. It's better for me to do it this way. But this is what other people say. Like, where's your call outs, man? I want to like, why don't you make your trades? Why don't you post all your stuff? And I'm like, I know there's a business out there where people do that. And they like subscribe to my Discord, check out my call outs, $30 a month. I don't need $30 a month for that. Yeah, I'm still chilling. And I always like to remind people. And they're like, oh, that's fresh and different. And believe it or not, people actually, I think, like that better than a call out room. Because every time they go to one, they always hemorrhage money and lose money, don't learn anything. And they come here and I'm like, I don't have a call out room. Like, well, you should have one. And I say, no, suck it up. I ain't gonna make one. And people go, oh, okay, well, what do you have here? And I go, education. We teach you stuff. Oh, that sounds boring. No, you gotta learn. Then they think about, oh, you know what? I really didn't learn anything in the last call-out room I was in. Okay. Let me give it a shot. And then give it a shot, then like, holy crap, I learned something. I like it, and I love it here. And I go, see, I told you so. Those things are dangerous. You start blindly doing what people are doing. Here's an example. You asked me right now, what are you doing next 3 to 30 minutes? You missed an hour ago when I said I'm not doing anything all day. So you missed that valuable piece of information. You're lost for the day. So pretend I made a trade, or I didn't make a trade. You missed the most valuable piece of. You're not literally sitting here with your hands in my pocket. Giggity, giggity. You're watching every moment of everything I do. The idea of following trades is a failed concept anyways. Because you cannot miss a moment. Of what I do, right? Live. So if somebody like, if that one sentence, if you didn't hear that and that's my motivation all day, and you walked in, maybe I was a long, like maybe I made a decision at the start of the door and I was like long, and you saw that, you come halfway through and you're like, oh, he's long, let me long too. And then like 5 seconds later, I exit the trade, right? That stuff happens when people do call outs and trade mirroring. Because if you didn't know the motivation of why I did what I did, when I did it, you're struggling to catch up. Oh, let me see what he's doing. Okay, let me get in on this trade. Right. So out the door, the DD band break, all that stuff, not a bullish setup. Right. Ooh, I have an idea. Alrighty, back. Sorry, I had some important stuff to do. Everything is important. Think you understand your comments or reference time frame. You said you're holding September. What I'm saying, Ralph, is my comment was I'm sitting out for the day. So in the next 3 to 30 minutes, there's nothing changing on that perspective. So usually in the first 5 to 10 minutes of every stream is when I do my calls for the day and what I want to do. So in the next 3 to 30 minutes, my style of trading is I make 1 trade a day. If you're outside of DD bands, I usually don't ever touch it. That's like first week stuff in the trading boot camp. Outside of DD bands, I don't play here. You should know that, buddy. You should come in here with the same mentality if you're trying to follow my style or learn what I'm doing. If there are people that are doing anything over the next 3 to 30 minutes, you would know that, like, literally lesson 1 in module 1, the very first set of videos you watch, the very first video of the very first section of the very first course of the entire course series would clue anybody in as to what I'm doing the next 3 to 30 or 50 or 100 or 900 minutes, right? So if the market was tradable, I would be talking about where it was tradable, right? But out the door, when my comment was to instruct everyone else here that coming in late and asking a question like that is why trade rooms and copy idea is dangerous. Because number one, you should know without having to ask me what I'm doing the next 3 to 30 minutes from literally lesson 1, module 1. I know you didn't skip that video, but you would know we're outside of DD bands. You should know that I'm just going to sit here and fill up the 2-hour space in the stream with commentary and fun stuff and teaching and talking about longer term outlook because there's nothing to trade. I'm that good at trading, I wake up and say I'm not touching it today within 5 minutes of the market, right? Number 2 is you guys should know that from watching the DD bands video. Matt personally doesn't trade outside DD bands pretty much ever, right? So, and then the commentary was if you come in and ask questions like, what are you doing in the short term? Then you miss the whole concept of what I'm doing in the short term is doing something to analyze the market on a greater time frame, not for a swing trade, but to understand what do I do when markets are irrational in the middle of this day is to try to figure out what's causing it. And that's kind of the exploration we do on the stream. That's the appropriate thing to be doing in the next 3 to 30 minutes. Is not making day trades, not looking for pivots, but trying to understand why we're seeing what we're seeing. There are days you sit out and yet say you could take a scalp here. I don't, again, you're here, if I were to say that, then ask me why I'm saying that. If I'm not saying that, don't ask me why I'm not saying that. That's I don't understand. You can take a scalp here. If I want to make a trade, number 1 is I never say you should take a scalp here. Like I said, I don't care what you guys do. I love y'all. I really don't care what you do though. And I never instruct people to do on their trades ever. I only trade on a stream to show that I really use my own platform. That's it. It's not to help people make better trades. It's to teach how to use Rocket Scooter platform. I'm not here to, so I can't, number 1, instruct you guys to do anything. That's illegal. Also, number 2 is if I am going to do something, ask me why I'm doing it. But when I wasn't doing something, you're asking me what I am going to do. When the answer from the moment the market opened was, I'm not doing anything. And speaking of, this time frame is a little off on the axis of futures. I need to look at this and let him know that time frame. So, axis time frame. A good question. So if I were to do something, I would instruct something I want to do while it's happening, but nothing's happening yet. And that's, so I always want to just make sure that I always try. My goal in training you and teaching you is to teach you not to overtrade. To me, that's the biggest, most important thing, is that looking for opportunity when it's dangerous or risky is not what I want to do with my day. But if something does arise, clearly it will. So as you, I don't know if you missed the whole morning commentary, the idea is in the irrational territory, I'm trying to determine if the market's healthy or not, or really selling off. As I went through like a 20-minute discussion on market breadth, we went through all the sectors. We analyzed, are people selling big tech, and are they going to finally start buying the Russell because it's the one that looks great? I have to decide if I want to make a trade or not. Like this whole hour plus commentary has been exploring that. Right? I mean, this was like solid gold information into the mind of a trader. When I'm sitting out, I'm not just sitting here twiddling my thumbs. I'm trying to understand why we're seeing what we're seeing. Right? So I want to make sure that it's not just, okay, the market's pivoting higher, should I jump in on the long? My job is saying, is the market going to crash the next 2 or 3 days? Or are we stable enough for me to just be okay sitting out today and get a long tomorrow? Easy to make money when you're long and have your 5K Discord followers, enter after, vice versa when you sell out. Call out rooms are a scam. That's why they exist. And people, I wasn't trying to throw them under the bus like that, but that's exactly what it is. People buy a stock, announce it to their followers, and then you buy the stock and then they sell out. They're all pyramid schemes. And that's why I protest against it. That's the other half of the reason. I think it's not only not teaching traders anything, but it's FIFO who makes the money. First in, first out. And so the leader and their buddies and their mods make all the money, and you make a winning trade every couple of weeks, which gives you confirmation bias that is a fruitful effort and worth your time. Oh, I did make that one big trade that one time. Well, you got lucky enough to push the button ahead of the majority of the followers that one day, and you think that that's going to win all the time. In reality, you funnel money up not only once, but twice, because you pay the person a monthly fee for them to take your money in the trade. You're dumb twice. Normally I pay Halo. Yeah, like normally me and some of the folks here will play Halo. You know, I realize you pay for a call out room, you're dumb twice, and I always tell people that because you pay them a monthly fee for them to funnel the trade win to themselves. Amazing, right? What an awesome scam. I protest against it. Never had one. Never wanted one. Can you post your trade and explain it for educational purposes? It's the same thing. So we do a Zoom call after the fact, right? I wait until noon to describe what I did so that people don't go in and do it. I completely protest against that behavior. I think it's so I trade live while I'm live. You can watch what I'm doing here. I don't trade penny stocks because they can manipulate that. I have a huge following. If I were to do that, then I would be that kind of behavior. There's no way thousands of people could change the course of the S&P though. So I'm like, okay, that's different. This is the S&P. Give a man fish he eats for a day, or give a trade room a fish. 2 or 3 people will eat it, and the rest of the people will just pick at the bones. Teach a man to fish, they eat for a lifetime. There you go. And the funny thing is that most people, there's a lineage of these trade room folks. Like back, let me give you some little trade room history. Like Tim Sykes used to do like the, penny stock stuff. And then like, this guy named Jason Bond. You remember that guy from the Eat, Sleep, and Trade? That guy? He was in that room and he branched off and started his own. And then Ross Cameron was in his room and he branched out and started his own. See, some traders in there get smart and realize that if you have the following, that's the win. So it's funny how those things spawn from a lineage of the student becomes the master, and they all have these massive followings, right? And trade penny stock. That's to me is when people wise up. See, they're the smart ones to realize, oh yeah, I want to be the guy driving the car. Yeah, so like to me, when Ralph, when things just look bad and I sit out, I got to determine what I think the market's doing. I mean, we're at a major inflection point. All year, market's been rallying, and I've never stepped aside and said this is the sell-off. I've always been supporting the rally. Today, the signs of danger are here. We have to decide. Is this market done rallying for a while? It's a big question. We have to look at all the evidence, and I'm still trying to chew on it. Today, we need to see what volatility ends up doing by the end of the day. This volatility crush out. Number two, where's the selling? We have to isolate this. What's selling and why? Are all things selling or just some things selling? Well, there's no news today. There's no earnings today. There's nothing really moving this. Let's see. Short-term energy outlook coming out in a little bit. Did it already come out today? Wait, hold on. Wait, I was looking at the wrong day. No, here it is. 11 o'clock. Okay. What sectors are selling? And the question is, in a healthy market, people will rotate into either the trending thing or the healthy stuff first, and then risk on into riskier stuff. If the market is truly bullish, we'll see A, positional data reflect that, B, commitment traders reflect that, and C, when tech is what's selling off, are other sectors rallying? Is there rotation into something else? And then we're looking at these together, and we're seeing that clearly everything's looking bad, minus healthcare. So the question is, while everything's looking bad, okay, number one, there's not sector rotating. The market is reaching a state of taking profit. This is the same market top. Question two is, are we rotating out of large caps and into smaller caps? That this red is only red because of the weight of the larger cap, and that the small caps themselves are actually green while the bigger caps are red, and then that's weighing all the sectors down. So we come to Russell that clearly has a BLU, and we're like, oh, that could be the case. Are people just rotating and taking some profit out of the big caps, and now we're going to start moving into the smaller caps? Because Russell hasn't moved all year. What I'm saying is, in a healthy bull market, we'd expect rotating into Nasdaq rallies, S&P rallies. Then they pull back, and then Russell starts to go up. And as you see, Russell's coming down too. So all things are pulling back, but Russell still has a nice bullish liquidity map for the day. It is supporting hedge pressure. It doesn't look terrible, right? DD is still looking good on the S&P, which means at some point, this is likely to revert to mean at some point in the next couple of days. Monthly map on the S&P also implies the same thing. So my question is, I'm trying to forecast what the market's going to do in the next couple of days or weeks to decide, how I feel about waking up every morning and trading this. So far, Russell is not shitting the bed and dying. But we're not seeing a big rotation in, but we are seeing that hedging in Russell today. So Russell being nice and clean. And of course, look, there's no irrational signals here. We're just outside of DD bands. So there's no day trade to make today. And the monthly map on SPY still looks strong for a week. So today, my thought is, let me just let this ride down, and then hopefully over the next couple of days, we revert back to mean in the big market. So I get maybe 3 or 4 days of a nice big rally back up. So I think that right now, my thought of grasping the greater market is to teach you guys, how my thoughts are. But really, the whole point of this stream today was to say that most people were 6 months late to being a bear. I might be 6 months early to being a bear. I might be just 1 week late. And the greater reward is being 1 week late. Right now, the case is very strong for the bear case. The market monthly maps are rapidly deteriorated in the last 2 weeks. Commander Traders is showing selling. So we got to make sure we understand why. There is no catalyst today or yesterday other than that credit rating devaluation in the bond markets. These are creating that turmoil and that lack of faith in the economy so far. Commander Traders is showing that selling and selling, right? You can see that there's a period of illiquidity. We're on this. We are literally on this since July 25th. The next week, we've had 1-2 week of short-term selling. Everyone's selling. The central banks themselves are in this yellow category. So I really have to understand, is anyone buying? And even the yellow is coming down. So, right. I'm not loving what I'm seeing. Is this the S&P? Right. A couple months ago, we talked about losing safety net number 1. Which was back in June, we lost safety net number 1 here. The dealers are no longer positive. Safety net 2 was that liquid markets don't crash. And this is an illiquid market. We are selling and selling. Both sides are selling with the dealers negative. This is a recipe for a crash. Okay, do we understand that? Illiquid markets. Well, then we talked about, okay, illiquid market. Well, clearly you see the VIX is starting to trade higher. Illiquid market is representing itself with immediate volatility. They're inversely proportional. More illiquid is high volatility. The VIX trading higher is scary as fuck. We might start getting risk intervals on VIX again. Not good sign. Like, this is like the market could crash in 1 to 2 days. Like, literally crash in volatility. So I need something that shows me that the market's got some stability, and that's where I'm looking for. So you see how it's not like I'm sky is falling chicken little. The economic data is improving. It's not like it was amazingly good. It was just getting better. GDP's looking good. Employment data is looking good. Growth is there. Inflation's down. All the right signs are there, but we're in QT that we just don't understand the effects of no Fed liquidity, right? So, or no increasing liquidity. And so when the market's illiquid, finally, after a while, how are we going to respond to that? Is there going to be healthy sector rotating as people they can't wait for this bull rally? They're going to get out of stocks in the tech sector and rotate into other sectors. We're not seeing that. Are they going to get out of the large caps and the small caps? Maybe we're seeing that. Is this an opportunity in the Russell? My conversation today with my student was Russell looks good. Should focus on trading the Russell be here? Are the indices going to move in different directions? Somebody said, Matt is missing the best educator in this segment. Want to learn how to trade, not just be sold signals. Matt has created the best platform. I love you, Thomas. Thanks, man. I appreciate that. That's really flattering. So I need to understand my rationale. Today, the market's fucked. I'm not trading today. It's doing its thing. But the lesson is this, right? There's a million bears that are going to say, I told you so. And within a day or two, I'm on the same page as them. Yeah, I'm like, yeah, no, I see it too. But I'm not hemorrhaging money while I'm hoping. That's the difference. I wait for that deterioration of my position that I see that it doesn't look as clean as I want it to anymore. There's still some bull positions left, but man, a lot of people have removed. Remember, we have to zoom into here. Remember how clean it looked back in like June? How people just couldn't long fast enough and bears were fleeing? We're not seeing that anymore. Bears are still squeezing, but those bulls are not there anymore. That bull side is gone, right? So I'm like, this is how great monthly maps are. Monthly maps are showing me this is probably it. Got no more bulls in here. So in the next 5, 6, 7, 8 trading days, get ready to watch that DD ratio. If that thing plunges below 5, hello bear market, we're back, right? Stocks are still in bull territory as of now, and clearly the S&P shows that. We still have bullishness for like a week or two. We got to see bulls step back in or DD is going to plunge, and then that's the time when I start to see, okay, there. But guess what? Here's the difference between me and the bears, right? Sky is falling, sky is falling, sky is falling, sky is falling. See, I was right. Every red candle, it's like, see, I was right. This is the one. But here's the difference between me and them. That didn't fool me. That didn't fool me. That didn't fool me. That didn't fool me. Those didn't fool me. None of those fool me. This one is like, okay, that's probably it. And if you watch this stream and you do this for 15 years, because I'm approaching year 14, you can be able to do that too. Everyone's like, I told you so. And I'm like, oh yeah, no, I know. You're not telling me anything. I see it too. There's no victory in being very early. Now the writing's on the wall. Not a lot of good signs left. And that's the whole point, right? Not every red candle has me worried about the market. There's still some positive signs. There's still enough calls floating things in the money. There's a lot of stocks out there that are still on bull side. But how long does that last? That's the question. Look at this. These are all bull setups. 280 tickers still on the bull side. Lions look around time when they're a lion. Oh, that's funny. UPS earnings were today. Yeah. Well, I always like to use the bar chart one just because I've always used it. I'm not gonna lie. The CME group one is an interactive chart. The bar chart one is not interactive as much. You can't really do anything. The CME group has their own, which is I just always use the bar chart one, so I'm so used to using it. But the CME group is, don't tell my buddies at bar chart, CME group one is slightly better. But I'm just so used to using the one I've always used. Because you can turn off certain lines, you can change the colors. It's just because it's an interactive chart. And I think they have one. I think this is it actually. Let me look. Oh wait, never mind. Don't listen to me. Actually, never used this either. They have one too, so you can go here and maybe. So wait, maybe theirs is better than the CME group because look at this. You can do tools, you can add things. Okay. Actually, bar charts is better. That's cool. I forget that they have that. So you can go add things to this chart. Maybe you can play with it. See if this changes anything for you. I just always use good old-fashioned old school. I forgot that they had that. Good deal. Okay. Blah. Market sucks. Resilience bad. All the things look the way they look. We're just not excited about this market today. Gonna let it do its thing. The S&P still has some hopeful bulls. So hopefully before expiration of next week, the 18th, we get some revert to mean. Not today though. But here's the art form, right? Here's the art form of being a trader, is knowing when to sit out. This is absolutely not tradable. Anybody trading inside of here is noise and junk. I don't take shorts. Unless it's off of something to short from. Today we were talking about all the things I drew at the beginning of the stream, that hedge pressure, all that was resisting, that the best you can hope for if there were upside, if there was a hedge break, the small change would go from there and close here. But out the door, resilience is negative. We hit the box and resisted. That's textbook. Rock Scooter. And on that note, we're going to call it a day. I'm going to get out of here. I love you guys. Technically no trade today, even though I did make a trade. It was only to test a feature of the platform. As in the mornings I have to, while it's live, I got to test things. Developer looks at it, make the change. Calls a sit out. Market's pulling back. It's looking scary, you guys. I'm not gonna lie about it. I am probably changing my stance that the market doesn't move. We're gonna do something next week or two. This could be a really, really brutal fall. So Russell's hanging in there. Hopefully that saves us. Now, Rock Scooter launch futures today. Lifetime members, you get a head start. You get a week ahead of everyone else to beta test. If you want to get in, if you're a Lifetime member, you join Lifetime, you'll immediately have access. Set up your futures account with Edge Clear. Your futures data will tunnel in. You're ready to go. We're glad to have released that to everybody in the next step in what we've done. Rock Scooter is amazing. We're glad to have you here as part of the family. We actually do love you guys so much. Y'all are our favorite people in the world. Thanks for supporting the dream, building the biggest retail platform on the planet. Ooh. All right. So we'll see y'all later. Zoom call.